Hello and welcome back. This is David from the Personal Finance Squad. Okay, this video is about understanding your paycheck so that you know ultimately what it is for your take-home pay. What is that money that you use to manage your money in your budget? So we have some items for discussion here, and you can see that we have gross pay. So this is also called base pay. This is money that you receive before any deductions are taken from it or taxes. And then that leads into pre-tax items. That would be, for example, a 401k. 401ks are popular, for example, because it's pre-tax. That means your money can grow deferred without tax until you take it out, with the goal being at retirement or at the earliest age of 59 and a half. And we will certainly talk about this in our 401k videos when you get there. Government taxes, so that would be Social Security, that would be Medicare, that would be federal, could be a state tax, things like that. And then there's withholdings chosen on W-4. So many of you have probably already filled out a W-4, which determines how much withholding that you're going to have from your check, which means how much money is the government going to keep, which ultimately reduces the size of your paycheck. Now we'll get into this later in the video because it is hard to understand exactly what kind of money is coming out, and we'll show you ways to determine your best value, to know what the break-even point is to make sure that you don't owe the government at the end of the year. So you can see right here that we have a sample paycheck, and we can see that we talked about gross pay, and right here we're saying that our gross pay is $3,177. And that is less $100 from the 401k. So this is gross or base pay. And this is your pre-tax item. Now you may have more than that. You could have medical, you could have union dues, things like that. Okay, so let's go down here and look at the paycheck itself. So we talked about year-to-date earnings. So right off the bat, we're going to say that this is the first check of the year of 2016 in this example, and we can see that the check date is 1/11. Your period ended in 1/6, and that means you were paid a week later. Oftentimes checks are held in arrears, so that means if you work 2 weeks, you're not going to really get it for 2 weeks later. So for most cases, that means if you start a job at the beginning of a pay period, you're not going to get paid to the end of the month. And then if you were to leave the job, you'll have 2 weeks in arrears, which is one paycheck, and then you'll have that coming afterwards. Okay, now we see year-to-date earnings down here, $3,177. And that means right here that the current amount, the amount that's taxable, is $3,077 because the 401k was taken out pre-tax. Now if you look a little deeper here, we can see the taxes that are coming out by the government. And right off the bat, we see Medicare, Social Security, which I wrote Social Security in here for you, but really it's called FICA. And then there's federal tax, that's the government, of course, and in this case there's a state tax. Now you may also have a city tax depending on where you live. So you can see here, you can get taxed to death, so to speak. So let's go down a little bit further, and let's look at some factual information, the known things that can help you understand what's coming out of your check. Now we talked about Medicare, and that is 1.25%, and that for Social Security or FICA is 6.2%. So that means 7.65% will automatically come out of your check no matter what. Now there is a case where Social Security won't be taxed in a given year, and that's if you eclipse the amount that they determine for each tax year. So for example, for 2016, it's $118,000 and a half, so $118,500. If you were to hit that number, say in November, and you had 3 checks left, that means for those 3 checks, you wouldn't be taxed this 6.2% here. So they're kind of saying you've hit the threshold, you've paid in enough. It's kind of like a mini bonus in a sense. So you can see it's a pretty high salary, so on the whole, most people do not achieve it, but if you do, then that's great. That's more money in your pocket, and there's no result of taking that money. You've already paid into what you owe. Okay, so now we can see the deduction amounts here. And so if we already know that this is 1.25% for Medicare, and we already know Social Security, then there's federal. And at this point, the federal tax rate, the amount of money coming out of this check is 7.77%. So to understand how much is coming out if you need to do it yourself, which is what we're trying to achieve here, is that to determine this 7.77%, you would simply take $239.23, and that is divided from 3,077. So this number is divided by this number here, and that's where you get your percentage. Now, a state tax, they all can work differently. In some cases, you can say, I know that they're going to need 4%. So you know what number to hit by percentage. It's a standard thing. Now, that doesn't mean that you have to actually have that much money coming out. That is up to you. Again, you can determine this by the percentage. So if you took 276.93 and divided it by 3,077, you could come up with that number. So it all depends on where you live, and even if you have a state tax. If you live in Florida, for example, they don't have a state tax. So it just depends where you're at. It's not a universal thing. Now you can see that the net pay is $2,408. So after all those taxes are taken out, after all those deductions, not a lot in this case, but most checks, if you have insurance, for example, you'll see definitely medical in there, which is not Medicare, it's your medical insurance. Then these are the types of things that derive from a paycheck. Some people could have a 401k loan. For example, that's after tax. Some people could have a union due that would be before that. So these are the things you need to go look at to really understand why my paycheck is what it is. Now the last piece we want to go through is we talked about withholding on W-4. Now that's the worksheet, of course, right? Now every year you can change that. In fact, in most cases, your employer should allow you to change that at any time that you want. It's up to you. That means you're going to have to fill out a new sheet, and your human resources department will have to go and tell the payroll company to go change those withholdings. What we really want to get into is understanding to your best ability how much is being withheld for your federal tax, so that you can determine if you are getting money back or you're going to owe them. So this is all just for federal. What you need to think about here is that you are paying in money to the government, and if you pay more than what is owed, you will get a return. And that's okay to get a return, but your goal should be to pretty much hang around zero. So you can be a little less in terms of owing or getting some money back, because what you want to think about is if you are getting a lot of money back from the government, you are giving them an interest-free loan. You are allowing them to take your money and go make money off that money. And what you want to know is, why am I not having that money in my pocket? And having that money in your pocket allows you to do a lot more things, especially if you have bills to pay. So let's just say, for example, you are getting back $5,000 a year. Now that $5,000 a year is a little over $400 a month. And let's just say you have a credit card debt to pay down. You could realize that that $5,000 could help manage that. Not only would you take off the principal balance, you are eliminating future interest on that revolving debt. For example, you could also use that money toward a 401k or pre-tax retirement plan of some sort. That is money that you've now invested over a longer period of time that has the ability to create compound interest. So this is something you want to realize. This is what we talk about in the squad, which is we want more money in our pocket and not someone else's. It just comes down to you being a more effective personal finance manager. You're allowing yourself more options to manage your money to benefit your everyday life and your future. And the last piece in here is talks about a CPA or someone like an H&R Block that will do your taxes. A CPA is a certified public accountant that will perform your taxes for you, and that you pay them to do that. Somebody at like an H&R Block, for example, is somebody that works there, and they just work for a firm, an outfit, if you will. And then there's the Quickens of the world that have software that you will put in information and it will kick it out for you, and then you can update your software every year for a small cost. In any event, between those avenues, those individuals will be able to tell you how much money you need to pay in so that you're not going to owe. There's one little tidbit down here, and this is an IRS app. It's an online tool that you put in information that can help you to determine the kind of money you need to put in without having these other resources up here. We're going to get into that in another video, And after using that tool, it will allow you, especially if you're more of an individual person who uses tax software, to really get down to knowing what you need to do with your money so that you can keep more money in your pocket and not someone else's. The goal here is to be a really good financial manager so that you, again, make your money work for you in the best possible way. Okay, so thanks for joining, and we will see you in the next video.